And welcome. This is Mary Ellen McGonagle, and you're watching the MEM Edge Show. And this is the show where each and every Friday at 5 p.m. Eastern Time, we bring you where the action is in the markets. And we've certainly had, on the surface, kind of a nonplussed week, but realistically, when you drill down, a lot of shuffling going on beneath the surface. And the broader market S&P up almost 1%. That uptrend still firmly in place. But let's go ahead and drill down. I'm going to share with you what we are going to be reviewing today. Of course, in the beginning, we are going to take a real close look at the markets, where we are, our expectation going forward. And from there, we are going to take a look at some of these newer groups that are beginning to show strength. You, of course, want to be able to take advantage of that strength. And then one of the best ways that you can find turnaround candidates, and this is for those of you that like to purchase stocks that have been in downtrends and are potentially turning. That can be a profitable area, particularly given the fact that the markets are hitting new highs almost continuously. I didn't think a year ago I would be saying that, but that's where we are, very bullish. But with that, a lot of stocks are already up and out. So we're going to take a look at some turnaround potentials. More big earnings still due out next week. And of course, I like to share those names with you because these are stocks that have an impact potentially on the broader market, but even more importantly, with stocks among their various groupings. So we have about 5 stocks that I'm going to share with you, and we can take a look at them. And then top picks in mid-cap, market cap. And I'm going to share with you 20 stocks that were put together by a piece by MarketWatch. I shared some of those yesterday in my Wealthwise Women show that I co-host with Aaron Swenlin. We didn't get to the mid-cap portion, so I think it's worth doing so. So we do have quite a bit that we are going to be taking a look at. And of course, all of this that I'm sharing with you is with an eye toward helping you get ready for next week and really take advantage of the action and what is going on. So let's get started. We're going to take a look here at a daily chart of the S&P 500. I use $SPX. Each bar here is 1 day of trading activity. And we can see that the market started this current uptrend back here in the beginning of October, represented by the index breaking above these key moving averages back at that period of time in conjunction with this RSI, that's a relative strength indicator, turning above this dash net neutral and turning positive. And these moving averages that I have, the green is your 10-day and the red is a 50-day simple moving average, very, very effective. And then down below we have the moving average convergence divergence. This is another momentum indicator, better known as the MACD. It's simultaneously back here in the beginning of October turning positive. So as long as we are finding continued support at this upward trending 10-day simple moving average, we are in good standing. We had a bit of a scare back here about a week and a half ago. And this is when the markets did break down, all in response to trade war fears. But realistically as well, for those of you not familiar with my work, I do have an MEM Edge report that's delivered at least bi-weekly, and then we have alerts throughout the week. And during going into this fear-based drop here, we had anticipated, those that are subscribers, hello, welcome. And so we did anticipate, simply because the market had been up 7 of the prior 8 weeks. And at some point, there was anticipation and we did get that pullback. But now, more recently, we are back up above this 10-day simple moving average in good standing with that RSI trending upward, pointing upward, and the MACD in positive territory. So broader markets in good standing. So let's go ahead and take this a bit further. What I like to do is take a look at what the sectors are doing. And this is going to be the 11 sectors within the S&P 500. So I've gone ahead and populated that within this candle glance view on StockCharts.com. Very powerful, really wonderful tool. You can populate it with your given maybe a number of ticker symbols. We're going to be using Candle Glance a lot today, and you're going to see how powerful this tool is as far as presenting a picture very quickly, and in this case, among the sectors. So I've gone ahead and added the RSI indicator, relative strength. You can add a host of different indicators that you can overlay. And from there, sorting it descending order. I want to see where the strength is in and among these various sectors. So up here on this upper left quartile, we have healthcare. And for those of you that watch this show each and every week, you'll know that we have been highlighting healthcare for a month now, and it's continuing to outpace the broader markets. If we have time, we can drill down further within that. But moving along, we can see technology. Now, tech did falter back here with that trade war fear drop. A lot of semiconductor stocks dropped, but they are having a great week. Tech back in the saddle, leading the markets. And interestingly enough, consumer staple stocks. Now, a lot of people think of staples as those staid high yielding stocks that you buy when the markets aren't doing well. But I will argue that consumer staples has evolved. It now has a pretty fair growth component. And as for those of you, again, familiar with my work, I am an expert, or certainly my expertise is identifying these big growth stocks before they advance. So I am very familiar with this space. I've been doing this for a lot of years. And among staples, you will see there are perhaps cosmetics, even these food companies that are now embracing plant-based foods. They're now evolving into growth stocks. So staples sitting up front here. Financials had a great day yesterday. This was following the Fed's announcement of no more rate increases. Hopefully we'll have time to drill down into this group as well. But let's go ahead and just quite simply point out some of these weaker areas. This is real estate. This was a big winning part of the market during certainly the middle part of the year with all the uncertainty. The move back into growth stocks has taken the shine off. So real estate and REIT high yielders down here in the underperforming area. So then from here, what we can do is take an even more refined look at the markets. And these are various ETFs, indexes that I find very, very helpful in guiding where the strength is among growth areas in the market. So what I've done is populated this candle glance view with not only the broader market indices, but also I have what's called IGV. This is software, computer software stocks, a lot of growth names in there, IBB, more volatile, but fast growing biotech names. Oil I kept in there, and you'll see why. And then also we have transportation stocks, and then the VIX is thrown in using that RSI indicator descending. Let's go ahead and update it and take a look at this, biotech stocks. This is something else for the last month that we've been covering, the strength in biotech stocks. And that's a really good sign for the markets, simply because these are generally more volatile. As investors embrace these highly volatile stocks, it is a sign of confidence. Investors are confident in this current bull market. You'd like to see that. And then we can move forward. The NASDAQ powered ahead by those tech stocks, the S&P. Take a look here. This is those semiconductors. And I talked about the fact that they did falter here with those trade war fears and also analyst fears, but they are definitely back. And for those of you subscribers to my MEM Edge report, you are well aware of this. We were able to stay with our stocks through this pullback. I know a lot of analysts at this period thought that semiconductors were done and out, but we felt otherwise. And so the names on our list in semis are really having a very good bullish week here. Let's take a look, because small cap stocks, this is another area that has been creeping up to the forefront. Remember, this is strength to weakness. Good to see the small caps up here in the forefront. Another sign of consumer confidence. Not consumer, I mean to say investor confidence, but a lot of that has to do with consumer confidence. We were seeing super high levels in the most recent report that came out. Weaker areas, we like to see VIX down here, now down around that 12, super low. So that's a good sign. So let's take it further from here. I have one more thing I did want to cover because I mentioned to you that healthcare, biotechs within healthcare are up here in strength. And I just wanted to share one way that you, not from just screening, but a simple way that investors can really get on top of where the strength may or may not be. And it's very simple. By reading the news, I tend to be a news junkie, if you will. Grew up having that daily newspaper delivered. I would eat it up each and every day. Now, of course, we're in the digital world, which is even better. But I'm just going to share with you an article that caught my eye. This came out December 6th, so at the end of last week. And so what I wanted to point out to you is this initiated, this came from Bloomberg. That's certainly a news service that I use quite a bit. And Bloomberg came out with this article that said that the FDA is approving drugs at what they termed a breakneck speed, and it's raising alarm. Now, this was meant for consumer rights. People are saying you're not doing your due diligence, but the reality is what the FDA is in fact approving drugs. I would not say a breakneck speed, but certainly a lot faster. And this is something that I cover with my reports and my work, the fact that the FDA has reduced the red tape needed, not alarmingly, I would say, but just enough so that we are seeing a lot of very innovative drugs. This is really exciting, a lot in the way of oncology with cancer treatments and any number of different diseases, Alzheimer's. And this is really what's going to be driving this strength that we've been seeing in healthcare. So keeping an eye on the news, that's just a sidebar comment that I did want to share with you as a way for you to also be able to capitalize and get in front of where the strength is in the markets. We're going to take a brief break right now. When we get back, I am going to share with you the turnaround, a way for you to get in front of potential candidates, and lots more. We will be right back. And welcome back. Here we're looking at this first page for StockCharts.com, and I'm just going to take you through, actually before I do that, I talked to you about turnaround, but we will get to that. While we're here on this first page, I want to share with you other ways that you can get potential candidate ideas. And I've done this before, but it bears repeating. And that is using this market movers, because oftentimes these stocks that are moving, there are oftentimes very relevant reasons, and those reasons will continue to advance those stocks. So what we're looking at here is the Dow. We can also take a peek quickly at other indices as well. We have the market movers for the S&P and the NASDAQ as well. But let's go ahead and look at the Dow. And what you can do from here is go ahead and click onto this candle glance view. This is what I talked to you about. So take a look. Instantaneously, we have a quick snapshot of those stocks that are up the most on the Dow 30 today. And so realistically, you can see they're not all in good standing. We have the 20 and the 50-day simple moving averages trending downward. But what I want to point out to you is the fact that two stocks, Visa and American Express, are up quite a bit, and almost 2% for American Express, 1.5% for Visa. So this piques my curiosity. Why are these payment processing stocks up today? And the reason is an IPO came out, Bill.com, billing.com, pardon me, for small and mid-sized businesses, all about digital payments. These companies, as well as American Express, Visa, there's another one that's on our MEM Edge list. They are transforming the payment processing system to the point where checks are not relevant anymore. And they are also improving the profit margins of a lot of companies that are able to reduce their staffing in the back office. So realistically, we are seeing a nice move here in American Express. It did peak in price here, as did a number of payment processing stocks. Fell back, and this is definitely what I would call a very ideal turnaround candidate, as the stock has broken up above these simple moving averages, your RSI and your MACD trending upward. I would argue the IPO, what I failed to mention is on its first day today, it gapped up 60%. That's the real relevance, and the fact that there is a recognition that these payment processing companies really have high demand. So that was one thing that I very quickly wanted to point out to you. And of course, you can do that same candle glance view with the NASDAQ and the S&P. And oftentimes you will be able to pick up on these themes and be able to capitalize on them. I can see on the S&P that we have 2 semiconductors, and that is an area I spoke to as far as strength. So well worth really just a matter of minutes that you can do that and get your arms around where strength is, certainly on a daily basis. And if you can capture news that is going to support continued move, you are really ahead of the game. So let's go back. I mentioned identifying turnaround candidates. The first thing that you can do with this exercise is go into the member tools page, sector summary. Go ahead and click on to that. I tend to like to look at the end of week view. Certainly it's Friday. It's going to have a lot of relevance. And take a look. Technology up 2% this week, double the broader markets, more than double the NASDAQ. So let's go ahead and peek behind the curtain and take a look at some of these sub-industry groups. This is amazing, 3.5% for semis. But what I want to point out to you today is you can now get the Scooter, the StockCharts technical rating is now here for these sub-industry groupings. And what I like to do at the end of the week, when we see a particular group showing relative outperformance, take a look at this telecommunications equipment. That Scooter rating is, from as many of you know, the higher the number, the better. We can get up to as high as 99. Well, here's a group that's up 2.3%, and it has a 5 Scooter rating. Talk about down and out. We can take a look at the group graph very quickly, and you'll see, in fact, really just how down and out. So maybe some interesting candidates. Let's go ahead and take a look at, by clicking on the name of that group. Now we're looking at the names within and among. Now, for my work, I will tell you, Sienna was up 18% yesterday. I am, so here we are. This is for the week. It is up 18% for the week as well. Okay, so that's going to be a big mover. But what I want it to do from here, I tend to like stocks with a higher market cap, more liquidity. So I'm going to sort this by market cap and take a look at some of these underlying stocks that could potentially be reversing that downtrend. So let's go ahead and take a look, because Qualcomm, actually, let's do Qualcomm, because I'll tell you that is turning around a bit, but the pullback was not quite as severe. So this is Qualcomm, QCOM. We're looking at a daily price chart, and we can see the price peaked back here in the beginning of November, and it pulled back very orderly back to just a bit below this 50-day simple moving average. And since then, we're looking at a daily chart. So over the last 2 weeks, we're seeing a nice advance. But what I want to point out here with Qualcomm is the fact that this moving average convergence, divergence, there's 2 factors. You want to pay attention to the actual position of that MACD, but also as this black line trends up and down through the red signal, that's going to shift, indicate to you a shift in momentum. So if we go back to the beginning, actually, I think I said, yeah, well, the end of November, let's talk about this pullback. We did get that black line down through the red. So that is a signal that the momentum has shifted. Doesn't mean you have to sell. We can see the stock found support at the 50-day. It's simply telling you that the stock is in the throes, pulling back and potentially breaking it down. But take a look at the action this week. We can see the black line up through the red. So it's not instantaneous for this turnaround, but we are seeing that signal crossover that momentum has shifted. But let's go back to the list, take a look at other potential candidates. I'm taking us back to that scooter rating 4 or 5 within this telecom space, sorting it by market cap. So let's take a quick look at Cisco and see if this is ready for prime time or not. And we can see Cisco's run into some troubles, earnings related and so forth. We can see the stock is attempting, this is a gap down after earnings, attempting to reverse this downtrend, but really is not having much luck, I would say, because from my work, what I like to see is the stock breaking up above that 50-day simple moving average on volume. Your RSI tried to turn negative, faltered. MACD, we did have that black line up through the red, but you're now still below that 0. We're not positive there. So you may want to put this on your watch list. I would not. I tend to stick with high quality growth stocks. I don't like to see gaps down on poor earnings. But for those of you that are swing traders, you're in it for a shorter term, you could keep it on your watch list as the stock breaks up above the 50 and we do get these outlying signals trending upward. It could be a good trade up to this 51, this 200-day simple moving average. So we can take a look at a couple of other larger candidates here, all with an eye toward potential turnarounds, because there is strength certainly within with Qualcomm. So we can we can take a quick look at GLW. This is Corning, and another one not ready for prime time, still waffling around this 50-day, not a particularly attractive chart. So what I'm going to do is kind of up the scooter rating, because some of these bigger names that I've been sharing with you have an 11, a 6. So let's kind of drill down and take this Sienna already up 18%, but we can take a look at maybe some of these mid-cap names that are a bit higher in their scooter rating. And sure enough, very similar to Qualcomm, peaked back here at the beginning of November, faltered, and now is breaking back up above these simple moving averages with your RSI. MACD had that nice black line up through the red crossover, and now today it crossed up above 0. So we're getting some nice turnaround, downtrend reversal signals in that NICE. Hopefully you captured that I went up the scale on that scooter as a way to capture names that are ready for a little more ripe, if you will. Let's do this. I did want to share with you another item using this first page in StockCharts.com on this lower left. Now, it's going to depend on how you set it up, but I have the sector summary. I like to see it on a daily basis. And take a look at this. Utility stocks are up almost 1% today. And that definitely caught my eye, because we could see how the high yielding REIT stocks are suffering. Why would high yielding utility stocks do well today, given that interest rates are not expected to be going up anytime soon? I'm sorry, the Fed actually is not going to be reducing interest rates, which means that the higher yielding stocks may not be quite as attractive. What I'm getting to here is another feature here in StockCharts, the ability to do what is called seasonality. And I wanted to see which areas tend to outperform in January. And I'm not going to put you through the entire exercise, but what I will share with you is the fact that I did go through every single sector, and guess which sector has the highest seasonality rating for the month of January. And it is utility stocks. A lot of the others are down around 60. Pretty much every other industry group or sector, but there is utility stocks. So I did want to point that out before we went any further. But let's take a moment now. I mentioned that some of these bigger name stocks are due to report earnings next week. And you will want to be aware of them because, again, they are large cap, well-known companies that can move other areas of the market. This first one that we're looking at is Nike and KE. The company is due to report on Thursday. The other reason I wanted to share this with you is share the concept that oftentimes stocks will tend to have personalities, if you will, around earnings. This is their most recent quarterly report. The stock gapped up on huge volume and advanced beyond that after reporting very strong numbers. Since then, this fallout here, they did have a change in their CEO, and they're also very, very tied with US-China relationships because a lot of this gap up here, a big part of it was sales in China. There is a huge marketplace for Nike's footwear in China. The company is due to report on Thursday, so it'll be interesting to see how they report because, again, they can impact a number of other retailers because of their size. Let's take a look at another bellwether name. This is Micron Technology in the semiconductors. What I wanted to share with you, too, is the fact that you can go down here and check full quote when you are looking at stocks, and it will tell you what group it is a part of. So this is in semiconductors. The reason I'm pointing out because we can see semiconductors haven't had a good week. Micron is not is among them, but this stock really has an impact on other semis, and I will show you. This is that breakdown back here in response to their quarterly release of earnings. So that's the beginning of October. Let's see if we can point this out because I do remember it back here. We did get a drop. It's not really telling, but MU does have an impact on other semis. So it will be of interest to see how they report to see if this group can stay in good standing. Another company in technology, electrical components. And this is another one that has a history of gapping up on after the release of their earnings. This has been a big winner for the MEM Edge report. Those of it that have been subscribers, we actually got into the stock before the gap up and it's still acting quite well. Another one that we can look at, this is another one that gets an awful lot of press when they report, and that is Federal Express. FedEx, of course, is going to be driven by demand for their delivery service, which also is viewed as a bellwether for how the economy is doing. And it's also very China related. They ran into issues with China and delivery there. So it'll be interesting to see because the stock really is down and out, if you will, and in a position to potentially rally should the company report decent numbers. We can see they're just in the potential throes of reversing its downtrend. So I believe those that is it for those companies that are due to report. We certainly have other one other thing with FedEx is this was their last release. They did gap down very significantly. They were about 12% below estimates on their release. So, and that was widely talked about on the news. I do believe I have another minute. Okay, so let's go ahead because I did have one other area that we can just take a really quick peek here. And I talked about using that weekly strength. Let's do this. See if I can get back to that. I'm trying to get to it quickly. Yes. So without going through that exercise, we can take a look at that weekly. And let's take a look at another area that has been strong this week with an eye toward uncovering sub-candidates. So what we can see here is that gambling stocks are up this week, and oftentimes that'll have a lot to do with their Macau holdings, but we can take a quick look at some of the names within these consumer discretionary gambling. Now, what I've done is sorted it by that scooter rating, and we can take a quick look at LVS. This is Las Vegas Sands, and we can see this huge move that the stock had. So that's not going to be as of interest to me, simply because the stock has already had a significant move. But I am going to have to leave it at that. For those of you trading, happy trading.